Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So today is the day of our Primary Vision Frac Spread Count. I know everybody's excited to hear what the new number is. And just jumping right into it, the current Frac Spread Count is 89. So if you remember that last week was 85, so we had an increase of 4. Now, some of the commentary that we have been having on Twitter and some of the other areas, we just want to highlight the fact that rigs are important. Will always be important. It's obviously a part of the process. But when we're looking at production, when we're trying to figure out where is production going, this moves you closer to that bullseye. This moves you closer to that number, because while a rig is going around drilling holes, getting everything ready, this is where the rubber meets the road and actually puts the hydrocarbons into the system. So this is why we look so hard and focus and spend so much time on this frac spread count, because this is where we want to see things starting to increase. You know, as we've said, we talked about needing something close to about 150 oil spreads to keep things flat. So this is why we think that there will be headwinds going into the end of the year, and why we continue to see this increase in overall frac spreads. So just to kind of put some color around it, we've had a little bit of an increase in Appalachia, but again, within a margin, so it's nothing too crazy. And then when we look at the Permian, things remain relatively flat. But as we've been talking about with the Bakken, the Eagle Ford, and other areas within Texas, we're still seeing a little bit of growth. We talked about the Bakken that could get to, lower double digits, and we keep getting, and we're, right there. And now we actually see frac spread counts jumping over rig count in the Bakken. So that's an interesting thing to look at, because as we've shown on other shows, there is a drilled but uncompleted wells available. There is something there, but it's also important to understand that not all of these DUCs are going to get completed, because they either fell out of zone, or are in areas that are non-economic. But you're seeing there's still something that's viable. And when you're looking at this push into the end of the year, we expect to see E&Ps find ways to really kind of maximize production to set themselves up for 2021. Because realistically, we're at the end of September, and when you consider the time to do all of this, we really have to start thinking about what does 2021 look like. And that's why, if you need to save capital, well, put down a couple of extra rigs, pick up 1 or 2 frac spreads, and try to get yourself into a sustainable area of production with a decline curve that's in that 10 to 15% range that we've talked about, in order to not have that 20, 30% decline curve. Then you're just working up a huge mountain as we get into 2021. And given where borrowing is and just where the market is, it's going to be hard to get that kind of capital to kind of get back up that hill. And that's why when we look at this natural kind of trend that we've seen, June 5th, we were at 58. Right now we're at 89. So you're seeing here this increase in this drive of almost 40 spreads to really try to get to this level of, well, how do we backstop this? How do we kind of correct some of these issues? And that's why we've seen the 4-week rolling average now move to about 87. We've been talking about the national activity maintaining a 4-week rolling average of about 81 to 83, with maybe a quick spike to 93. Here we're starting to see a little bit more of a steady state at this mid 80 to upper 80 level. And it's something where we think you're going to get a little bit of an increase. We'll probably hit that 93 before we exit September, just as we have the Permian coming back a little bit. We see a little bit more activity moving around as guys really try to prepare for what's happening in the remainder of the year. And it's important to appreciate that the export market, as we talk about in our EIA show, still is at that 2.7, 2.9 million is what we're expecting through the remainder of the year, which will help support some of this, some additional light sweet coming out of the market. But the question is going to be, what does China continue to do? Because China has been pulling down about 750 to 850,000 barrels a day, and Europe really hasn't been buying because the spreads have tightened up a little bit. So when we talk about where we were versus last year, you can see that we're just kind of in this steady state, which is pretty normal versus 2019 if you consider where we were from September through November. And then at the end of November, you have, especially in 2019, just given where we were going into the end of the year and, crude prices came under pressure, people just took a long vacation from November till essentially, Christmas into New Year's. And then as you can see, as we got back into January, guys started to get back to work again at a lower level just because of the pressure, but still in a growth profile. Here, the trajectory is kind of up, but if you look at the econ show that we've been showing and the things that we've been talking about daily activity, this looks very similar. You have this big drop off, and then you kind of have this slow grind higher to then a steady state level. And that's going to be the kind of what we're looking at now is when do we break above that? Because as we get into 2021, if we really want to maintain, let's call it, 10.5 to 10.8 million barrels a day, it's not going to be at 89. It's going to be somewhere closer to over 150, because when we talk about keeping oil production flat, we're talking about 150 spreads in oil alone. That's not including the Haynesville, the Utica, and the Appalachia in general, because that's going to be an additional. So it's probably closer to 180 to 200 spreads that we should be seeing in order to kind of keep us on this movement. And as we've been showing with refined product overhangs, refinery overhangs, and just this glut that's been forming and continues to remain in the floating market, it's going to be hard to see pricing move in that level. But the positive side, we have seen spreads tighten. When we look at WTI in regards to LLS and Magellan in comparison, and is it tightening because we have more demand? Well, yeah, China remains the buyer, but we also see an increase in competition going into Europe. So that's going to be interesting, which is something that we talked about at the beginning of our econ show as we saw OSPs get adjusted. So, next week we have an exciting lineup. We're going to have our conversations with a prominent developer in California. So we're going to get to talk about commercial and just real estate in general to see, what's happening in the world, how are things going. We're going to follow up with our usual, the Wednesday EIA show, Thursday econ show, and then Friday our favorite, the Primary Vision Frac Spread Count. I know we keep promising the inflation show. That's been a little delayed just because of, we've been covering some other things. Like we just launched this morning something on inflation in food, China, India update, and kind of what's happening in the world today when we look at food security and how that really is impacting not only the world, but also the U.S. So thanks for watching. Hopefully you have a lot of things to watch for the weekend. Have a great weekend, and we'll see you next week.